So my name is Kate Brodak. I'm CEO of Women 2.0. Many of you are already in the community, but for those of you who may have come to us through another vehicle, we do a whole bunch of stuff on gender and representation in the tech space, strong focus on the startup space and small and medium-sized business, etc. Part of that area of focus is, of course, offering opportunities for the business owners and founders in our community to be growing in the right direction, hence this great workshop. I'm really excited. Shiloh was literally the first person I thought of when we were talking about this. We had a little bit of a Twitter back and forth, and I said, this is an obvious. So Shiloh is one of the founders in our community, and actually we had her on stage pitching her company, and she'll explain her company a little more in the kickoff. On our stages last year as a finalist in one of our pitch sessions. So super excited to have her back here as the expert that she is. And just a couple of sort of order of business and housekeeping. We have a nice smaller group today. We should be having about maybe 5 to 10 additional people join us, but still a nice manageable group. So encouraging people to definitely use chat. There will be a couple periods of time that Shiloh is going to have a Q&A session after some of the sections that she's going through. Feel really free, pop into chat, ask questions as you're going along. And then, of course, if you feel comfortable popping off video or getting in an actual audio video question, please feel free, share your details, etc. And then, of course, would love feedback post-session. We are just starting to offer some more in-depth programming, and so would really love feedback on how this session was, accessibility, that type of thing. So definitely very open to feedback there. Without further ado, I am going to kick this over to Shiloh, and she is going to take you through making sure you have your business from a budget standpoint straight on track to be amazing. So Shiloh, over to you.
Good morning, everybody. Well, morning for me. I'm on the West Coast, probably afternoon for a lot of you. Yeah, it's about to get real. I just want everybody to like take an internal deep breath and then let out the angst, because we're gonna let go of some of this craziness, these feelings we have about money and in all regard, especially right now in these times. Let's like shut the world out and focus in on our business, and we'll get started. So I'm going to share my screen. So you can see the full thing. So everybody's got it, right? You see the first slide? We're all good? Awesome. So to get us going, I just want to first thank Kate for allowing me to do this. I've had it in my heart and my mind to talk about budgeting for so long, because I get a lot of questions about, like, you know, I've raised some money, or I've gotten money, or I've made some money. What do I do now? And this is going to be our moment to sort of dig deep into, like, what do I do now that there is, you know, a little bit of money, even a little pre-money actually. So this is the agenda, what we're going to cover. So I'll tell you about me and my background and why I'm somebody you should listen to. And then we'll talk a bit about fixed versus variable expenses. And then we're going to talk about budgeting for upcoming tax bills. Don't start sweating yet, okay, guys? And we're going to talk about money anxiety. And then we'll close it out with some automation tools that I use and love to sort of make the process quite a bit easier. So this is definitely a deep dive. This is not the basic bookkeeping class at all. Feel free to start getting up your questions, pop them in the chat, and we'll get to them, as many of them as we can. So a bit about me. I am knee deep in tax. It's absolutely ridiculous. I've been doing this for 13 years. I've worked in corporate. I've also had my own practice. And then what I currently do is I'm the founder and CEO of Compliant, which you'll hear more about during the tax section. But basically, Compliant is a tax platform for businesses. So it's important I listed out all my qualifications because you guys shouldn't be taking advice from somebody who does not do this for a living and has certification. That's really important. I hear a lot of people giving tax advice and they don't have tax knowledge. And I hear a lot of people giving legal advice and they don't have legal knowledge or a legal background. So be careful not to take advice from people who just have had an experience. Make sure you're taking advice from people who, you know, do this for a living and have sort of qualifications. Not to say everybody who has qualifications is great, but cover your bases for sure. Did I have, do you guys see my quote? Yep, okay. So money is a terrible master, but an excellent servant. I love this because we all need to be thinking about money in terms of the way that it serves our business. I think what we tend to do is we think about like the race to get more money, but if we reverse that and think like the race to build, like what do I need to get to make money to get to, rather than like I just need money, I just need money. Reverse it. How can money serve you? What's your end goals? You know, what are you trying to get to? And then using money to get you there. And if we think about it like that, I think we can kind of reposition the way it serves us. So I just want to start with a quote. So my first poll question, drop it in the chat. How many business credit cards do you all have? I would love to know. I'm gonna open it up. One. Oh, good. Somebody said not one, a lot of ones. Okay, 0. While you guys are popping in, I'm gonna just give a little tip. It is important to at least have one business credit card. Because if you think about it like this, it's cash management, right? So if you're putting everything in through your business bank account, you're not giving yourself enough flexibility to make sure that you can kind of control the cash that comes in and out of your bank account. And that matters for 2 reasons: lending when you want to borrow, and then also investing. If you need your cash position to be a little bit better at a certain point in time, it makes, oh, you're seeing both my slides? I have no idea how to not do that. So do you just see one now?
There we go. Yep.
Boom.
I was trying to be
See,
subtle
I
on that, Shiloh. You got it.
Totally fine. Totally fine. We get it together. But I was just saying that I think it's important that we have at least one credit card for cash management. It allows you to put, so think about like all your subscriptions, all your expenses, put all that on the credit card, and then leave your cash for things that you can only pay cash for, like payroll, wires out to make payments. Those things should be the things that are coming out of your bank account, and then put all of your expenses on your credit card. That sort of allows you to have more control over the cash management, because you're only paying your credit card at one point during the month, a point usually that you could kind of maneuver around, usually the end of the month or the middle, depending on the credit card company. And sometimes they'll allow you to adjust that date if you need to make sure that your cash looks a little bit better at the top of the month versus the bottom. All of these things to make, all of this really is for reporting, right? So your reports look better in a way that you, oh, my mouse isn't working. Come on. Okay. In a way that, you know, makes sense for you. Just wanted to pop that in really quickly. So,
Shiloh, you might be getting to
let's
this, but
first.
someone did ask
Yep.
About building business credit, and I don't know if that's the direction you're going to, but we've got a couple of questions regarding building business credit and the earliest you can kind of get a business credit card.
I'm not going to talk about it, but I will. I'll answer that question. So business credit, specifically in startups, there's a lot of effort right now being made to provide credit without a personal guarantee. If you have enough cash in your business bank account, you can usually get a credit card that without a personal guarantee through Brex or Silicon Valley Bank. In fact, if you're a true startup, in the sense, Silicon Valley Bank will give you a credit card with a $10,000 limit, whether you've raised money or not. So you can start to get in that space of building business credit that way. If you go through a traditional bank, they're going to ask you to do a personal guarantee, because traditional banks have different rules than some of these smaller startup banks or maybe like a credit union. But a traditional like Bank of America, Wells Fargo, Chase, they're going to ask you probably for a personal guarantee, which you can, you know, you'll provide your credit, your corporate tax ID number, and then also your personal social security number, which will guarantee that the bill will be paid. And that will start to build your business's credit. And you can do that as of day one. You don't have to have any sales for those types of cards, but I do recommend at least having one, specifically one that has a like perks. So if you see yourself traveling when the world opens back up, if you're gonna do a lot of like shows or travel, you wanna make sure you have a card that has travel perks. Or if you do a lot of driving and you wanna make sure you have a card that has gas perks or food perks. So those things all can show up to serve you a little bit better down the line.
Great.
Awesome. So I'm gonna exit my screen really quickly because it's showing me everything. Okay, sorry. I'll get it together. Give me half a second. Half a sec. Let's do my desktop.
There we go.
Oh, where's my slide? I lost my slide, guys. Give me half a second. Okay. Sorry for the malfunction. There we go. Okay, I'm just gonna leave it because my computer is acting funny. But everyone can see it, we're good?
Yep.
Awesome. So what is budgeting? Basically, it's the comparison of what you expect to spend against what you're actually gonna spend. This is important because it improves your decision making. If you have no idea what money you're expecting to spend, you don't know how to maneuver. So let's assume that you think that it takes, $1,000 to run your business. You don't know that you need to make $1,000 in sales in order to cover what it takes to run your business. So you're basically working backwards. You're trying to go for sales without knowing what it takes to run your business. If you knew that it took $1,000 to run it and you got toward the end of the month and you're about $200 shy, you now can implement, a sale to cover the last little bit to cross the bridge. You lose that factor when you don't know what your budget is or what you have to spend. Also, let's say you get funding. I recently closed a round of funding and people just dump this money in your bank account and you want to obviously use it to the best of the ability. How do you know what you need to cover to get through a proper marketing budget? Or how do you know, what portion of these funds are going to go to equipment or hiring? So budgeting really helps you like make these decisions. And what I see too many business owners do is they just take the money and spend. And they spend it based on whatever they think it should go to rather than what it actually needs to go to. So I wanted to point that out. The other thing that I want to make sure everybody knows is the illusion of money. I call it the great lie. Your bank account balance is lying to you. Whatever it says right now is a lie. It says $1,000, you do not have $1,000. You have $1,000 minus the ad spend that's about to come out, payroll that's about to come out, shipping fees that you have to pay. All of these things you have to take into account. So the money you see in the bank account, it really isn't the truth of what you have. And that's what throws business owners around a lot. People are not taking advantage of running reports to make sure that they can see the true number their business has to spend. Hence why bookkeeping software is super important if you use it, but we'll get to that in a second. Come on, where's my next slide? Okay, you want to act shady? Fine. Okay, so I borrowed this from Balance and I loved it so much. I wanted to make sure we had it. So I just wanted to talk really briefly about the difference between fixed versus variable expenses. So fixed expenses don't change no matter how much money you sell, right? No matter how many items you sell, your fixed expenses stay the same. That's things like rent, payroll, equipment, depreciation, all of that. Variable expenses change based on how much your company sells. So commission costs, shipping, ad spend, all of this changes based on how much you do or do not sell. The reason why this matters so much is because that fixed number will tell you exactly how much you need to clear in order to break even every month, right? In addition to what's variable, which is usually like a percentage breakdown. So this fixed number is really like your bread and butter. It's the thing that you need to always be aware of so that you can clear your bottom number every month. So Um, oh, we don't want to act right today. Goodness gracious. Ooh, template time. So what I'm about to do is pop into the chat a link to this template that I made for everybody, and then you can copy it and um, share it or don't, or do whatever you want to do. Here's the link. And what I love, can everybody see the template? Are we good there? I can't see your faces. Somebody say yes.
Yes.
Okay. And I just sent the link. Oh, I just sent the link just to Kate. Just kidding.
Oh, well, I saw it.
I just saw it.
And Shiloh, just
Here
so
you
you
go.
know that you've got to just open up access to that.
Oh. Anyone with the link? Yeah.
Anyone with the link should work.
Yeah, I thought I had that. You're in? Oh, people are in. Yay.
Okay. Okay. Great, great, great.
Okay. So the first tab of this is just a quick breakdown. I saw someone pop in and say, what's the difference between this and financial projections? Financial projections are what you expect your business to make. So a projection is literally a guess on what your profit and loss and balance sheets will look like. A budget is just literally how you plan to spend money. You're not trying to guess what your money is going to be. You're trying to determine, if I hit this estimated goal, this is how I'll spend the money. That's the difference between a budget and a projection. Also, budgets are really simple. They're not anything super complex. Projections are really sort of complex, based on complex assumptions that need to be built into this financial model. That's a lot more streamlined and, prettier. A budget is literally like adding and subtracting. It's really, really, really simple. I just broke it down into fixed versus variable, and you can just grow these lines as many of them as you need. Kept it super simple, and I added a column for you to compare what last period is against this period. I did it by period and not by year, so that you can see if you want to compare month to month, if you want to compare quarter to quarter, that's there for you to keep an eye on. Also being able to monitor if something changes dramatically, this is where you see that change, right? So if last year I spent $1,000 on marketing, and this year or this month I'm spending 2,000, what has changed, right? Now I can spot, what are we doing differently? What happens all too often with businesses is they wait until after the mistake has happened, and it's far, too long down the road for them to recover anything. Budgeting and accounting, bookkeeping is really your way to catch your mistakes, or catch mistakes somebody else is making. If you're a business owner, you can't run every facet of this. Maybe you give these tasks away. Finding the holes in that, you do that in your financial reporting and your budgeting. So I really encourage people to use some version of this. Even if it's not this, use some version of it. The last tab I made is a credit card breakdown. I have had clients that have had 18, 19, 20, 25 credit cards. So having a breakdown of that credit card is terribly important. There are some parts to this that I think are helpful. This close date column, notice that there is not a date due anywhere on this sheet. That's because the day your bill is due really doesn't matter. You should be paying the bill on the day before the close date. So if your credit card closes on the 5th, you need to make sure the bill is paid by the 5th. That's because that closing date, that amount is what gets reported to credit bureaus. So you are basically a month behind if you're paying it in full and you don't pay it before the close date. It really puts your credit in its best position. So, and I would say this applies to your personal cards as well. Paying by the close date instead of the payment due date. Also knowing the percentage of usage is terribly important, I think, for your business as well. Not maxing out. And then the other thing that I like that I see a lot of clients do is they use a card per type. So they'll have one card solely dedicated to marketing, one card solely dedicated to inventory, one card solely dedicated to food and gas, because it helps you to monitor. If you know that your Brex card is only for marketing, you can catch something sketchy a lot faster. Plus you can also control, you know, who's using and not using a little bit easier when you know what the cards are being used for. And then also just keeping an eye on your interest and any payment grace periods you might have, because it might change the way you use your card if the interest is really high. Okay, so feel free to keep that, use it, don't, that's up to you. Next, questions. It's question time. So let me see what we have. Oh, yes, pay by the close date and not the payment due date. I'm gonna stop sharing for a second so I can see everybody's face. Does anybody have a question they want to talk through? I'd love to hear from some of you. Feel free to unmute yourself.
Shiloh, just to clarify, is this is kind of the open Q&A section for everything that we've already done so far, right? So if people do have any
open Q&A section.
Great. So if anybody did want to dig into things like credit, you know, specifics around budget, now's the opportunity before we go on to the next section.
Any questions about the spreadsheet as well that I sent out? Now's probably the time to ask. Take a break, have a sip of water.
And I might also suggest that if anyone feels bold and wanted to share within this realm anything they've learned from past experiences, successes or failures, please feel free to do that as well. Always really great to learn from each other.
Absolutely. Absolutely. Yeah. Finance is such an interesting thing. I think a lot of times it gets lumped in with funding and not so much with management. For new businesses where we're paying for expenses out of our pocket, how do we keep track of that? Oh, I love it. So first, I would suggest opening up a business bank account and transferring money into that bank account instead of paying for things out of your personal account. It's a lot harder to keep track of. You have to have like receipts, you have to have all of this documentation. But if you just, as the owner, transfer, let's say you know you're going to spend $500 on things this month for your business, just transfer $500 over to the business and then spend all you want out of the business. Now the expenses lie with the business instead of lying with you and then you having to prove that to the business. If you've already done that, bookkeeping software will allow you to basically create like categorize your expenses as coming out of owner investment or owner paid or something like that. It's just all in categorization, and you would do that at the bookkeeping level. So if you use QuickBooks or Xero, they both have the opportunity for you to manually enter expenses that aren't connected to a bank account. I hope that makes sense, but yeah, that's that. Someone else says I asked that. How do you predict variable costs on a budget? Is it just an educated guess? It's just an educated guess, because unless you know that shipping is 10% of your sales, you know, and you can maybe break that down by what has happened before. So if you look at a past, you know, last month, and let's say last month you had $1,000 in sales. Wow, I love the word thousand. Anyway, last month you had $1,000 in sales, and you know of that $1,000, 250 of it was shipping. Then there you go, 25%. So you can just roll it forward that way. What's the next one? Oh, okay. Anything else before we move on? No? Okay, I'll go back to sharing. My next poll question, do you use a CPA for your tax filing? How many of you? No, a lot of no's. Okay, I'm gonna ask a follow-up question. If you said no, how do you file your business's taxes? TurboTax, okay. By myself, brave soul. Oh, by myself, I love to see it. Look at everybody handling their own taxes, yes. Okay, I love that. Is it Cherie? I'm not profitable enough yet. I love it. So let me just say, tax is such an interesting thing because you have to, oh, they do, that's awesome. You have to be responsible for paying whether your business makes money or not in most cases. So doing it yourself, I am so excited for all you brave souls. For people who pay someone, I think that's really smart. Specifically, if corporate income tax, the higher you get, the more complex corporate income tax returns become. Right now, when you're small and maybe you don't have sales or you don't have very many sales and you can just jot yourself and expenses down and walk away, that's fine. Or if you're a sole proprietor, it all comes on one form, so it's pretty easy. If you're a C Corp, an S Corp, it gets to be a bit complex. If you have equipment and you need depreciation calculation, once that happens, once you hear the word depreciation, you need to hire somebody because depreciation can be complex and that's not for the faint at heart. But there is, so sole proprietors, you definitely can do your own tax. It'll be just fine. It's really simple. I would just say if you are a sole prop and you're doing your own tax, make sure you're documenting every single solitary expense, even if it's something that you pay for on a different card or what have you. Please document every single expense because that's really where your butter is. I also wanted to say before I move on, paying a CPA, I know can be expensive. And so people think about like, oh, that's $2,000 or whatever people charge to file my return. And they think like, well, I can just do it myself. But there comes a point when the liability of what you're doing yourself becomes too high. And the stakes become too high, that the audit potential grows as well. So you just want to make sure you have that level of protection. That's also what a CPA does. They provide for you some audit protection or defense in the event that you get audited. So anyway, just a little note there. Ooh, business tax, this is where I thrive. This is my area. I love it. So the interesting thing about business tax, and I broke it down this way because these are all responsibilities that you have as a business owner in varying degrees. So you may not have business personal property tax, and you may not have payroll tax, or you may not have sales tax, depending on what you sell, but you will always have a business license. You will always have an annual report if you are an LLC, C Corp, or S Corp, and you will always have income tax. So it's important to know, I meet a lot of people, the only tax area they think matters is that income tax line, and they don't even know what the rest of them are. So remember, as a business owner, you're responsible if these things don't get paid and you were required to pay them. They don't accept I didn't know as an answer. So I like to make sure that I give that bit of information. Let me pop in the chat and see if anybody's asking any questions. Yes, it is. Let's go through them. Okay, so this top line income tax is state and federal. So you'll have a federal income tax due, as everybody knows. You pay it to the IRS. The state income tax, if your state has it. I know in Texas they don't. Some other states they don't. So income tax is just tax on the income that the business has made, right? So business personal property tax is tax you pay for the assets that the business owns. So if you're like a vending machine company, you would pay tax on the value of the vending machines. That does not include inventory. Let me be clear. If you have inventory, you won't have to pay business personal property tax for inventory. The next one is payroll. Everyone knows that. It's payroll tax for your employees. If you have them, that's where that tax gets paid. The employee pays a portion, you pay a portion as the business owner, and then all of that gets paid as withholding tax to the taxing authority. The next one is sales tax. This is tax on how much you sell. And that you're probably thinking like, I thought I already paid that as income tax. No, income tax is the income the business has made. Sales tax is based on every single solitary sale that the business does. Usually it only matters for products, people who sell products. In some states, services are taxable, but most are not. You can also check with your state Department of Revenue and confirm if whether or not you have to pay sales tax. And then business licenses, we all know, is just a fee to do business in a certain city. And then your annual report is usually due to the Secretary of State. If you're an LLC a professional LLC, a C Corp, an S Corp, all of those usually pay an annual report, tax or fee. So that's the gamut of business tax. And this matters because this gets built into your budgeting system, right? So if you have a line for tax, usually you're just thinking that's income tax and I can ignore the rest. If your sales tax, or business license is based on the income, you really need to make sure you have a separate line for those. Because if you had a really good year, your tax bill across the board is going to be higher. So I'll check the chat because it looks like there's a lot of questions or notes.
There's just a question
career
specifically
coaching and college admissions. What's that?
Just a question about sales tax in Canada. I'm not sure if you know that, but oh, Suzanne's chiming in. Is sales tax the same as HST in Canada?
Yes, it's similar. Yeah, it's similar. This list is US based tax. I didn't realize people from out of the country would be on the call, but yes, these are US taxes, but it's similar. Yeah, someone said they have a career coaching, college admissions consulting company. Usually consulting services, any kind of service that's not a tangible product you can hold in your hand, generally doesn't have sales tax. But again, you may want to check with your state. Different states have different rules. So that's revenue. There you go. Great advice, Suzanne. Take it from her. Does anybody else have any questions that they did not put in the chat that I can address before we move on? Nope. Okay, moving on. Dun, 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 dun. So this is compliant. And what we do is we help you budget this list here and what applies to you and doesn't apply to you. We formulate a budgeting system based on your revenue and where you are in the world and what you do. And then we supply basically an estimate of what we think that bill is going to be so that you can build that into your budget and be able to be prepared to make these payments. One of the things, the reason I started Compliant and why it's so important to me is because I've had so many clients that have come to me and did not know they had to pay something and were so far beyond the payment due dates that bills were turning into $50,000, $60,000, $70,000 in tax payments, and they had no idea how they were going to pay it because they were really small. So this product is the answer to that. It's basically, I'm right there with you. I want you to be successful. And one of the areas that get ignored the most is tax, because we see it as this nuisance thing that I don't really want to do and I don't want to be bothered with. And I absolutely understand that. However, it's still a requirement and the liability still stands. So the difference between a small business and a really built out, aggressive corporate business is they have an entire team dedicated to managing their tax holistically by tax type. I mean, literally 15, 20, 30-person teams. The requirements are the same. Whether you're a big corporate or a small business, you still have to pay the tax. So having a tool, I think, to help you will get you a long way. And you can visit us at compliantapp.com and we'll help you. We'll help you get there. Looks like there's a question for the Q&A. Love it. If we have a CPA, can they use, can they be our tool? So the tricky thing about CPAs, and I'm glad someone asked that, is that they don't necessarily always cover every single tax type. Sometimes a CPA will cover an income tax, and if you give them a bill that you received, they'll fill the form out and pay it for you. But CPAs can be very expensive, $150 an hour, $200 an hour for them to fill out a form for you. Seems sometimes an expense people don't want to pay. So Compliant just helps you self-navigate. For a lot of folks I saw on there that were doing their own tax, it's really an assistant tool to help those people, navigate that I'm doing it myself space. A CPA can do all of these for you. Some of them don't. Some CPAs don't touch sales tax. Some of them don't touch payroll tax. It really just depends on what your CPA does. And this may be a question for them. If you're vetting CPAs and you're looking to hire one, finding out if they cover each tax type can be helpful.
And Shiloh, on that note, are there any other maybe top 2-3 questions that people should be asking of their CPA aside from that set of taxes? Do you have any other suggestions there?
Yeah, I would ask them if they have any clients with a business similar to yours. That's important because sometimes CPAs get pigeonholed into a certain category. So they only, handle restaurants as clients, or they may, have like, they only do service-based businesses or whatever. So they may hyper focus on a certain type of business. So making sure that they have, some experience with business types that are similar to yours is a good to know, especially if you're asking them to source out all of these tax types, right? Because a good portion of this is tax research. It's making sure, like, if you're going to say, hey, I want you to pay my sales tax CPA, then they need to know if whether or not your business is sales tax liable. And that takes research, and sometimes they don't cover every tax type. It's not really a requirement.
Great. And two other quick questions in the chat around this. First, Suzanne was wondering if you would still hire a CPA if you use compliant, or will it replace that?
Nope, it's not meant to replace them. It's meant to be, if you don't have a CPA, you can use it and it'll help you. And if you have one, you both can use it in tandem. It also gives you reminders when you're supposed to file and pay certain returns and make certain payments. And so you can use this tool alongside a CPA. So it's with or without.
Great. Is the CPA title mandatory when you're looking for someone who does this type of work for your company?
Ooh, that's a great question. It is not mandatory. However, I encourage it. If you're not a CPA, you are either an enrolled agent or you have what's called a P10. And that P10 gives you access to file tax returns on behalf of someone else. So it's not mandatory for whomever you used to be a CPA. The difference is a CPA can defend you in audit. If the return that a tax preparer does for you comes back and they want to audit you, the tax preparer cannot help you. They're going to just like give you a high five and say good luck and God bless. But a CPA, a part of that certification gives them qualification to stand in that audit on behalf of you and defend you. That's really what you're paying for.
Great. And she had, you mentioned enrolled agent. She had specifically asked about CPA versus enrolled agent. Is that the main difference that you just highlighted?
Yeah.
Great.
Yeah. Okay. Enrolled agents are a step above a tax preparer because they have to take like a test to make sure that they understand the ins and outs of tax return filing. But again, enrolled agents, tax preparers, bookkeepers, people with P10s, all of these people heavily focus on just filing your income tax return. They probably cannot do most of these things. They only hyper focus on your income tax return. A CPA will cover the gamut. They'll help you with financial reporting, journal entries, projections, budgeting. A CPA will cover your financial landscape versus an enrolled agent will file your return.
Great. And
what's other advice?
Yep. One other quick question, clarification from Monique, asking whether she basically says, so a CPA is not required to ensure that you are compliant on all taxes?
No, they're not required. Some other business professional can do it too if they've got the background. Anyone can tell you, but it just takes a significant level of research. And I don't know a lot of like tax preparers or bookkeepers that have that kind of background and would know how to do that research. They may, if you know someone who's like, yep, I know sales taxes, I know it all, I can do it all, great, hire them. You don't have to be a CPA. It's just a level of, protection for you. It's a certification basically that signifies that they know the ins and outs of state regulated CPA practices or accounting practices.
So what I think I'm hearing you say is that while a CPA is not required to ensure you're compliant with all taxes, they may be your closest bet to making sure that you are.
The accuracy.
Is that okay? Great.
100%. 100%.
And
100%.
Last question while we're right here.
Absolutely.
Oh, just a quick question from Suzanne, but we might not, well, I'll let you determine whether you can remember this. What was the other advice for hiring an accountant or CPA? When we were asking for one or two questions of that you might think of, and you said, do they have experience in your sector? And then what else?
Yeah. I would ask them if they cover, what tax types do they cover, and what specifically, like what services do they specifically provide? Are they gonna act as a CFO? Do you need, and what do you specifically need them for, right? If you just want a CPA to file your tax return, then you're only asking them what tax types they cover. But if you're wanting a CPA or an accountant to step in and be like a CFO, a person that's going to run the financials for your entire business, you're going to want to make sure that they do all the things that you need them to do. A lot of CPAs don't do bookkeeping. So knowing that do you do bookkeeping or not is probably a good question. Or if they have someone on staff that does do bookkeeping or not, that's a good question. Sometimes they may expect you to do it, or for you to hire that out and then come to them with completed books, and then they're going to manage and organize those books. That's one thing. Another good tip is, asking them, do you teach or guide your business owners, or are you more of a hands-off, I'll do it all and tell you when I'm done kind of person? I think it's valuable to have a professional that will guide you through how to read financial reports. Having a person that will guide you through what your tax return means. What does this number on this line mean? Have someone who can explain to you what reconciliations are. I don't think it's wise to give over all of these tasks to someone and then close your eyes and wait for them to get done. A lot of fraud happens in that space, a lot of negligence, a lot of dropping the ball, and not just on the professional, but people in the company, period. Having someone else do the books and then you not checking up, or knowing when there's an error. Human error, people make mistakes, it doesn't even have to be fraudulent. And I have seen that happen. So if you, the business owner, have your hands off 100% and are giving it away to someone else, and that person's not willing to guide you through what they're doing to make sure you have a clear understanding, it really puts you in a position of blindness. You really don't have the ability to make really sound, solid decisions about your business if you're just like getting handed these reports and you don't even know what to do with them. So having someone, a CPA or a professional who's willing to guide you and teach you, is a really good indicator that they know their crap.
Great.
Hopefully that was helpful. What else? Any other questions? Water break.
Sorry, I don't think
I was gonna move on. What? No? Okay. I was gonna move on, but I want to address some headaches or like fires I've seen in tax that I think you need to be mindful of. So a lot of people don't know that taxing authorities communicate. So the people who process your state income tax talk to, the people who run sales tax, who also talk to the people who do business licenses, not verbally. But what happens is the minute that you file with the Secretary of State that you want to register a business in that state, that your name goes on a list, and all of these sub authorities get that list. And then you might get a notice in like a month or two from the LA business licenses that says, hey, you have a business and you don't have a business license, you owe us money. So what people have to be careful of is they think, well, oh, it's fine. No one's gonna, how does payroll tax even know that I have employees? Or how does the sales tax division even know that I have sales? It's because the divisions speak. So if you report income on your state, like income tax return, sales tax finds out and they say, you reported income, but you didn't tell us. So it's really important that each reporting authority gets, accurate information, because I have seen that blow up in people's faces a lot. The other thing I want to make people aware of is do not ignore notices. If you get notices from any taxing authority for any one of these types, don't ignore them. And if you don't understand them, you can pop into the compliant tool and submit your notice and we'll explain it to you. You can go to a friend, a CPA, whomever you know. Please, please, please do not ignore those notices. That's the only way they communicate. Taxing authorities don't usually make phone calls. They don't usually send emails. They usually send notices. And those notices are your opportunity to come square with something that you maybe didn't know. So just be mindful of that. I've seen a lot of mistakes happen there. Another tip I'll say is if you are at a place where you get a tax bill that you cannot pay, it's too expensive and you can't afford it, you do have options. You can call the taxing authority and ask for a payment plan. You can ask for a penalty abatement, which if there's penalties attached, which usually if you're late to pay something, there is penalties attached. And let's say you've got a good reason why you're not late, you can request for them to waive the penalties and interest so that at least the bill comes down where it's a little more manageable. And then always, especially now pre-COVID or post-COVID times, you absolutely should be requesting any kind of payment plan or delay payment or deferral or whatever they've got. Please take advantage of that, especially now while it's being offered. So just some red flags I wanted people to be aware of. Also, another thing, when you do get a notice, make sure that if it says estimate, don't pay it. So an estimate is just not that, it's just an estimate. It's meant to scare you, to wake you up, to say, hey, we need you to pay attention to this. I know a lot of state income tax companies send estimates. Sales tax usually sends a lot of estimates. And that's really just a tool to get your attention. So when you see that, don't panic. Just call the taxing authority and ask them what you need to do to make this bill square. So I just wanted to pop in with those because I think it's important to know. Naomi says, is it a good idea to have a CPA do taxes for a first-time self-employed partial business owner that's doing taxes on just their income they received and not anything business related? I think you're asking, I don't know how you could be a partial business owner. Do you mean that you're a partnership? Naomi, do you mind getting on camera?
Yeah, so it's for a partnership, but yeah, it won't be like anything business related. It's just for like the income that was paid to one individual, one person.
Oh, gotcha. Oh, gotcha. Yeah, you can have a CPA do any kind of tax. They don't have to just
like, is it a good idea? Like, I mean, I've always done the taxes, but now things this year are changing.
Yeah, I mean, if you feel like it's more complex, absolutely.
Okay.
Absolutely. If you feel like it's more complex, I absolutely recommend don't do it yourself. You know, don't guess, don't assume, give it to somebody else, you know,
okay.
that may be a little more versed. Any other questions? Oh, yay. Money anxiety. So I listened to this really fantastic podcast a while back. I can't remember the name of it, otherwise I would share it. And that person touched on money anxiety on a personal financial level. And I thought, man, this really applies across the board. And I think that it's important just to mention, I won't spend a ton of time, I only have 2 slides, but I want to spend a ton of time talking about it. But I think it's important to address the fact that, you know, it's really an uneasy and unhealthy attitude toward engaging with and administering finances in an effective way. Sometimes that comes from deep trauma. Sometimes that comes from a lack. And when you've lived a life in lack, as I have before, so I know and understand that, it really affects the way you think about money as you grow and become surplus, right? So getting as much education and as much knowledge as you possibly can is, I think, extremely beneficial in that space, because anxiety really does play mind games on you a bit, especially now we're in this hyper anxious time and everybody's thinking like, oh man, I don't have enough, or how is this going to work, or am I going to get past this space? So just having some tips or tricks or coping mechanisms in place, I think can really help you separate yourself from the business. That's why I always try to encourage business owners to not mend your business with your personal. Have a separate entity, have a separate bank account, have separate management. Separate yourself from the business. You are not the business. You are running the business, you are operating the business, but it's not you. So when you put that money in a separate spot and then spend that money over there, it takes some separation away from how you manage your personal money and the anxiety you may feel there. And then I tell clients too, like, you know, that's your child, like that business is your baby. And so thinking about it that way instead of we are one and the same, and what happens to the business happens to me. Not necessarily, you know, it's a business, and the business can go bankrupt without you personally having to go bankrupt. So just thinking about giving money anxiety, its moment. And so I saw this really cool breakdown of ways to deal with it. You know, pay attention to the signs. If you feel like you start to sweat after, you know, spending more than $2,000 or $3,000 or $4,000 on something, or, you know, you're anxious about spending money at all, anxious about how you're going to make money, and not sure if things will work out, you know your signs, and then know when to put your trigger management in place, and then plan your finances well, budgeting, projections, pay attention to them. You know, the budget that I have, I literally touch it at least 2 or 3 times a day, you know, because things are constantly changing. So I mentioned earlier that we closed a round of funding. I have literally manipulated that budget since we closed probably 4 or 5 times, because things change. I make a hire and then that person, you know, won't accept less than X dollars. So I have to adjust my budget to make sure that I have enough room in the budget to pay other people. So don't think of it as this thing you made one time and then you never see it again until next year. Look at it all the time. Save it to your desktop, have it open, have it always available. And then as you spend on that budget, take that number down so you don't overspend. That's really your eyesight into, you know, how you manage. So also managing your debt. Oh, I have a spelling error, how funny. Managing your debt efficiently, and then give your mental space a rest, because again, the world is crazy, but you don't have to be. So I just wanted to pop that in there. And then another question, 1 to 10, rate your anxiety about money. Pop it in the chat. 1 being the worst, 10 being the best. Yeah, that sounds about right. Okay, fair enough. Yeah, like I was saying, you know, it can be crazy. So having things in place to help you navigate that, I think really helped to soothe the anxiety. And then just knowing, you know, knowledge is power. The more knowledge you get, the more powerful you feel, maybe the less anxious you might feel about it. So that's something else I encourage everybody to do. Gotcha. Does anybody want to talk about their anxiety at all? I'm happy to listen and give you any advice about what you may be feeling worried about when it comes to money. Any brave souls want to unmute themselves? If not, it's totally fine. We're a judgment-free zone, don't worry.
This is Monique. How you doing?
Hi. Good, how are you?
I think one of the things that I'm good. This is awesome. Thanks so much for hosting this, guys.
Yay.
Yeah, go women. Awesome. I think one of the most anxiety producing things for me is I'm making that educated guess on budgets. It's like, I feel like I'm making that number up and really trusting in my financial literacy enough to know, like, okay, I understand my business enough. This is an accurate, educated guess, and I'm not totally throwing everything off because I'm, I don't know, $200 off here. And, you know, and so it's that, I mean, anxiety always comes from unknown. And so literally it's the variable unknown that's kind of anxiety producing in a budget for me.
Oh my gosh, that's so true. I absolutely understand that. And it really isn't like those budgeting numbers aren't arbitrary, right? Like if you've been operational, you kind of have an idea of what it takes to do things. And you get those numbers from your bookkeeping tool. So if you use QuickBooks or Xero, you can run a report from last month, right? What you spent in last month. And if you don't use bookkeeping tools, you can just pull your bank statements and highlight all your business expenses and then add them up and then use that as a starting point. Okay, I spent $1,000 on, you know, ad spend last month. I know I need to take that up because I need my sales to be better. So I need to budget at least $200 more. And yes, it's like flex, but it's your decision as the owner, right? You get to, this is where your boss shines. This is, you know, where your boss swagger like shows up to meet you, because you get to say, you know, I need more money in this space. I'm going to add it. You know what you've been doing. Now you just need to think through, how can I level this up? And then find strength in that. Like, you know your crap. Don't worry. You all know it. You guys got it. Any other brave souls willing to talk through their anxiety a little bit? I'd love to hear from someone else if you would like to unmute yourself.
I'll go. Yeah, I'm Cherry. So I think the biggest thing for me is like, so I started this business in February, right when COVID hit. Also, like, recently got married like a few weeks ago. And so with
Mhm.
my now husband, I think it's just like a little bit of anxiety or pressure on both of us, because he's like, well, while you're trying to figure out, because I've had to pivot like a billion times since I've started, he's like, while you're figuring out that, you know, what are we going to do? And then letting him know that, you know, it's like, we'll be fine for now, but trying to like ease that anxiety off of him a little bit. So I think it's not so
Yeah.
much me, but trying to figure out how to, especially because he comes from a background, like you're saying, about money anxiety. And I mean, I do too, but like I've worked in tech for several years and he works in like higher ed. And so that's kind of been like the dynamics kind of going on about like trying to figure out how do we manage money. And I'm just like, can you, you know, what's our long-term goals? Like, don't go for the instant
Yeah.
gratification, like especially right now.
I love that. Point out the long-term goals really, I think, bridge the gap, because money anxiety, it seems immediate. Like, what are we going to do right now? But really, the business game is long-term. So I love that. Yeah. Hang in there. It's hard with the partner that like almost doesn't understand when you're doing your own thing. Maybe they're not the entrepreneurial type and you're like,
No,
yeah,
he's
I'm going to
super
do this
supportive.
startup.
I do want to add that. Like,
Oh,
he's
that's
super
awesome.
supportive. He's the one who helped me like
Awesome.
make that leap, because I totally would have just still been in corporate and stuff like that. But it's
Yeah.
just the timing of the leap now, it definitely
Oh,
put
yeah.
everything in perspective when it was just like, yeah, I made a
Oh my
leap.
gosh.
Wait.
Yeah. Hold on, pandemic. No, I get that so seriously. When I closed around, I was like, how was I able to raise money in a whole pandemic? This is crazy. Yeah, times are so interesting. I can agree with that for sure. I'm like holding on to everything. What will happen post-election? I don't know. Yeah, it's crazy. Thank you for sharing. Does anybody else have any thoughts about their money anxiety they'd like to share?
Yeah, I have one.
Yeah.
My startup right now, or I mean, there are a couple, but one of them is mostly like personally funded. And so I feel like I'm just making things up when I'm moving money from my account to that account. And it feels like I'm gonna mess it up and like I'm making it all up as I'm going.
Yeah.
And it's like not really making revenue yet. And so yeah, it's fake and I'm gonna get in trouble.
No, it's not fake. It's not fake, Felicia. Don't worry. Tell me more about what you think is fake, like the amounts that you're moving around for. Do you have a
Kind of.
budget? How are you feeling about
Yeah, I
what
mean,
part of
so
this is?
COVID really messed everything up. And so at this point, I'm trying to like stay afloat until next year when things open up again. And so
Yeah,
right now I'm kind of like reframing everything to try to maximize any tax benefits I can.
nice.
And
Smart.
trying to like put in the right amount of money so that I can deduct more, which makes it feel fake because I can't do like the physical stuff that I was gonna do
Yeah,
for my business.
yeah.
So that's mostly it, trying to like balance those things.
It's not fake though. I know it feels like that, like, oh, I'm just trying to like, you know, snake my way through the tax system. You're
Yeah.
not. You're taking advantage of as many resources that are there and available to you. It's not fake. That's exactly what it's there for. Like, use it. What we don't do enough is we don't use those benefits enough. We don't funnel, our expenses through our business, as many of them as you can. I didn't have a slide about this, but I'd love to segue into that for a quick second. Like, maximize your business expenses, as many as you can. It is not fake. I promise you. I promise you. It's there to serve you. If you are paying for internet out of your home, put it on your business. You use that internet to run your business, make it a business expense. Your electricity, you need it to run your business, make it a business expense. Like, maximize every single thing that you can in those expense categories, because that's what they're there for. Right? Like, we as women, I think we tend to be more conservative with things. We don't want to like abuse any systems, but that's what it's there for. $750, 45K in taxes. Like, I promise you, use the benefits. Like, it's there for you. I promise.
Okay. So those all come out of the business side and then will end up
Yeah.
like passing through.
Yeah. That's exactly what it's for. As long as you document it, that's what's not fake. It gets sketchy when you don't have proper documentation. Run it through your business bank account. Actually pay the bill in that account, instead of trying to like, oh, I paid it in my own account, I'm just going to pay myself back. that starts to look like payroll. So you just want to make sure that you like run your expenses through your business.
Okay. Are there good resources for like what deductions are available? Or do I have to read the actual tax code?
You don't have, no, please don't. The tax code is, let me tell you, a snoozer. I have a master's in tax and I've taken several tax research classes, and they make you read that code. It's like peeling your eyelashes out one at a time. Let me tell you, it's awful. You can quickly just look through like a sample return, and there's a list of expense categories there. Usually bookkeeping like QuickBooks has a sample of like the way they structure their chart of accounts is basically your category sampling, like how you can expect to take those expenses is built in that. You also can grow it as broad as you need it to. That other business line on the tax return, the other business expense line on the tax return is broad. You can put anything that you think, you know, is relevant in that category. I'm going to pop in the chat really quick because there's some questions. I think that says, will there be more understanding of those expenses this year, as I've been warned not to expense home office as not to create red flags for IRS? I have never heard that doesn't work, or that home office expenses can't be taken. I think what they may mean is there's a deduction you can take if you're a sole proprietor, like it's like a based on the square footage of your home office. I think that's the one they may mean as the red flag. But expenses to run your business are separate of the home office, like electricity, cable, you know, all of those things. That's not a home office expense. That's a utility expense that's needed to run your business. I've yet to hear that there was a red flag around that. I actually have heard the opposite. There's more leniency around that, but who am I? I'm just one person. Go with what you know. Yes, TurboTax does teach you a lot about business deductions. I would pop in there. There's a book on Amazon called 475 Tax. Ooh, there you go. I love it. Thanks for that.
And Shiloh, I think you're caught up in terms of questions. A couple just shared there in the
cool.
in the comment section. So.
Okay, cool. We'll pop back to this because we're just about towards the end. So automation. So this is my favorite part because I love things that make my life easier in all regards. So I just wanted to pop in some of the bookkeeping software that's available to you. I know a lot of you talked about TurboTax. TurboTax is a sister product or brother product to QuickBooks. They're both owned by Intuit. So if you are in the Intuit family and you like Intuit products, QuickBooks is right there. All of these things do the same thing. They all manage your books. Bench does it for you. Pilot does it for you. Zoho, FreshBooks, Xero, and QuickBooks, they're all things that you have to manage yourself. So I just wanted to provide this as a core. If people are thinking about like, I don't want to do the bookkeeping, what's a thing I can do so that someone else can do it for me, you know, Bench, Pilot. Also, QuickBooks has a version of like an assistant tool called QuickBooks Live, where you can hire a bookkeeper to work in your books for a certain number of hours, and they're managed by the QuickBooks staff. So I've seen and heard some success there. So,
and Shiloh,
try that if you need it. Mm-hmm.
Shiloh, we've got one question about Wave, the tool Wave.
Oh, yep.
If you know it, if you have any feedback on it.
Yeah. So I've heard of Wave and I know of it. It's very similar to Xero. I know they're a Canada-based product, so they must be probably really popular in Canada. I have not used it personally, so that's why I didn't put it on here, because I don't have any personal experience with it, but I hear that it's good. Essentially, all these products are the same thing, and they create financial reports. That's your goal, is to get to organization, categorization, financial reports. So as long as your tool does that, you're in there. It's doing what you need to do.
And Shiloh too, what's the connection then between these automation tools because these are bookkeeping, and then back full circle to things like if you are using a CPA, et cetera. Can you talk through that a little bit?
Your connection's going in and out. Can I talk through bookkeeping and what?
I'm typing, hold on.
Oh, yeah, gotcha. So all of these tools, a CPA or tax preparer can use to pull your data into a tax return. So if you use QuickBooks and in the Intuit family, they have a product called ProTax Connect. That ProTax Connect is a tool that CPAs or accountants use to e-file your tax return. And the way that makes it easy is a bookkeeping tool. If you're managing it and keeping up with it, connecting your bank accounts and actually utilizing the tool for what it's meant for, you can automatically transfer the data from the bookkeeping tool into the tax return, and then the tax preparer can now review that transfer, comb it for errors, make sure that it's correct, and then they can e-file it. So it just makes the data entry a lot simpler.
Great.
Anything else? No, I can move on. Somebody asked me, an investor asked me recently, what's the point of all of these things? Like, it's not mandated or required by law to have bookkeeping. It's not. I call them comfort tools. And they're really there to make your life easier when you just really quickly need to know, how much did I spend on marketing last month or last year or compared to last year? A bookkeeping tool, if you use it the right way, can give you quick snapshots into your business landscape, how money is being spent across the board and how much of it's coming in, liabilities, assets, equity, all of it. It's really like a quick general snapshot of that, and it does it at a faster pace. I also want to say, no shade to bookkeepers, but a lot of this you can do yourself. I see a lot of people paying money like for a pilot. Pilot, I think, is kind of on a more pricier end. When a lot of this you can do yourself. It's just a matter of deciding, what did I purchase and what category does it go into? And if you can manage that, you can do it. Are there any questions? Oh, thank you, Jessica. Okay, so one of the tools that I'm going to dig a little deeper, and this is a sample account, this isn't anybody's real account, don't worry. But I wanted to add a snapshot, and I'm using QuickBooks as an example because most people have QuickBooks. So I felt like it was the easier way to reference how to use it, like to improve automation. So connect the bank accounts, every account that's related to the business, all credit cards, savings, checking, whatever you have for your business, connect it. Refrain from connecting personal accounts because it will include those personal expenses as part of your business overall landscape. And if you do have personal expenses, you have to make sure you categorize them as personal expense so it doesn't get lumped in with your business stuff. Set rules. So there's a little tab up here next to banking. It says rules. I encourage you to set as many rules as possible. I think Xero has this function as well. And setting rules just means as a transaction comes in, you can tell QuickBooks how you want QuickBooks to handle this transaction forevermore. So if you know that everything you buy from AutoZone is for the vehicle, then you can call it vehicle expense, set a rule to categorize every expense from AutoZone as vehicle expense, and then it will automatically do that forevermore every time you buy from there. And those rules take the guesswork out of you having to come in here and do so much categorization every single weekday, month, whatever you're doing. So set as many rules as you can. Use the receipt capture tool. So this little tab here, receipts, you can access that from the app. And basically it's just taking a picture of the receipt directly in app, and the receipt will upload into the platform, and you can turn that receipt into an expense, or it will automatically match to the bank fee expenses. So if you're the kind of person that wants to make sure you keep up on your receipts, which, yeah, I know there aren't a lot of you, but that's good. If you're that kind of person, the receipt capture tool really does help with that one-to-one tie-in.
Quick question,
And then just
Shiloh.
reconciling once a month. Yep.
Sorry, can you just clarify which tool this is you're showing specifically?
This is QuickBooks. Did you guys hear me? This is QuickBooks.
Yep, you're good. Sorry, we just had a quick question. And then we've got, when you're
Awesome.
done with this section, we've got 2 other questions.
Okay, so, and then the final step is just to reconcile. You want to make sure that you reconcile your books every month. And the process of reconciliation is just matching your book balance to your bank balance, and then making sure every transaction ties. The reconciliation process is how you catch fraud. I tell every single business owner, please learn how to reconcile. I will teach you, because it's really your way to catch if there's a mistake in your books and if there's a mistake in your bank. QuickBooks makes it very simple. You just click a reconcile button from the register and then follow the steps, and it's pretty simple. But really, it's your way to see every single transaction that applies to that period from your book and from your book balance and your bank balance all at once. And it's the only way especially if you have a lot of accounts, that I've seen that's successful for catching fraud. When you have a lot of transactions and a lot of accounts, it's fine if it's just one account and you don't have a lot of transactions. It's not a huge deal, but when the larger you grow, that really becomes a thing you lean on to make sure you're catching fraud. What were the questions?
Great. We've got one question on, if you pay for stuff out of pocket, do we add the money in accounting tools as an owner investment or something, then add expenses? Basically out of pocket, how do you deal with it?
Yep. So what I do, I don't do books anymore, but when I did, I would add, do you see these blocks up here? These are all account types. I would add a separate account for owner's charges. And I would put everything that the owner paid for out of their own pocket under that fake, like, ghost bank account. And so every time they would charge something, I'd ask them to scan the receipt, and I would code the receipt to this owner's account. And that way we could monitor how much the business owner was spending. And then at the end of the year, I would just transfer that balance to owner investment. But that's like the accountant way. Maybe the quick and easy way is just, you can call it like owner investment. You can categorize it that way. And then just add to the memo, paid for something, whatever you want to choose or whatever.
Great. Next quick question for a brand new, just starting out effort. Can most of this be done in Excel?
I don't recommend it. Unless you are an Excel genius, I don't recommend it. And QuickBooks is very cheap. The self-employed version is like $9 a month or something. I don't recommend doing that, because the hard part is when you start with that kind of process, you don't really know when it's time to stop doing it. And so you let that go too long. And the way I like to think about bookkeeping and your books and financial management with your business is run your business as if you are already where you hope to be. That way, when you get there, the process is far more seamless, right? It's a lot harder to add all these transactions when you've got hundreds of lines on some Excel sheet. But if you start there, even if you only have one transaction, now you've got a process in place and you're starting to build habits while you're slow. You're starting to build good process while you're slow, so that when you pick up, all you're doing is implementing what you've been doing, and it's a lot more seamless. I do not recommend Excel. Nope, I don't recommend that. Any other questions?
Not right now.
Awesome.
Oh, one more coming in.
Yep.
For the owner account method, would you do this annually or quarterly for tax purposes?
I do it annually.
Great.
Yeah. Okay. So I wanted to pop in some budget automation tools. And I love when I see myself, it's great. So Scoro and Plan Guru, these two I know I'm in the startup world. If you are as well and you're thinking about raising money, they ask you for projections. Plan Guru is a more advanced and expensive version, but Squirrel is actually really good. I used it. There's another one, I think it's called Budget Blue or Budget something. I don't know. I haven't used it, but so there's a couple of budget projection tools that you can put some assumptions in the tool and it will generate your projections for you. And then you can manipulate them as you need to. But I would recommend using something like that if you need to build projections. Projections are different than budgets. Again, somebody asked that earlier, and I just want to reiterate, projections and budgets are not the same. A projection is what you expect to make. A budget is how you're going to spend the money you make. So, and budgets, again, are personal use. Projections usually are what you give out to investors or lenders or whatever you plan to do to acquire more money. Both of those products I have seen and used and are very helpful. They're a bit advanced, and if you're a startup, you're probably thinking, I don't need all these features, but projections are advanced. Projections are really in-depth looks and assumptions about how much money you plan, the business plans to make, and then how that money will be spread across, you know, every category. And it also does it in a really formalized manner. So if you need to present reports to an investor, you know, you look a little fancier with a nice laid out projection versus something you kind of made up. So us, because it's me. And then Zapier. Guys, if you don't know what Zapier is, let me tell you, it is an incredible, incredible tool. It literally just ties tasks between different things. So if you need to, whatever you can dream of, if you need to add the emails from your email list or emails that you receive onto your MailChimp list, it will do it for you with a Zap automatically. If you need to create an expense in QuickBooks based on an email or an order or something, it will do, Zap will connect these tools for you. So let me just encourage you all to take a look at Zapier. It's a beautiful tool. It has made my automation life so much better. It's just a really quick tie between products. And there are so many software products we're using. So to be able to allow those things to talk is just super important. For me anyway. So I love Zapier. It's a great automation tool. I encourage you all to use it. Looks like there's some questions. Yeah, no?
Yeah, we do have one question, and Myra, I'll let you pop in. The initial question was discussing budgeting for project work, but Myra, do you want to pop in for a little detail on that?
Sure, thank you.
Sure, I can hear you.
Yes, thank you. My question is about if you're doing bookkeeping for someone who does project work. So for a consultant who does speaking engagements, who outsources their training services to businesses, then they may have a major project where they know that they're getting X amount, and then it may be 6 more months before they begin to get income for the next big project. So what would be the best way to budget for a company like that, or for a small business owner like that?
So this budgeting or this project-based billing, these projects are like once in a while, or are you managing multiple projects at once?
Multiple projects at once.
Okay, so in that space, QuickBooks actually has a project feature. A lot of people use it traditionally for construction, but you actually can use it for services as well. And it allows you to assign time, expenses, and billable hours, like billable hours, billable expenses, and anything else related to the project. It allows you to book it under one lump sum thing, and then it allows you to watch it along its process. So it's traditionally for like construction, like, or whatever, but you could use it for any type of project base, and it allows you to manage multiple projects at once. And I really think you could use that as a great tool to like navigate your payments in that space. As far as, it's just projects. It's the advanced feature. So if you have,
it's QuickBooks, right, Shiloh? It's in the QuickBooks family.
Yeah, it's Quick.
Yep.
It's QuickBooks, and if you have, I think it's the either the top tier advanced or the second to top tier. I can't remember for sure which one. I don't have my QuickBooks open right now, but it's one of those tiers. But you'll see it when you look at the price comparison. It'll say like budget tool or project tool. I'm sorry, it'll say project tool. So you can just add that in. The other thing I didn't mention in this automation thing is QuickBooks also has a budget tool. If you have the plus or higher account, you can just go into the gear icon and select budget, and it will generate a budget for you based on what you've done prior period. And then you can manipulate that and then export it into an Excel sheet too, as a tool. It's a little bit simplistic. I don't love it, but it doesn't do what I needed to do when I needed to do it. But I think for a really simple thing that you could use, that one is really good as well. And I mean, what's that?
I was just going to say, so from a concept basis, the person is really just starting out and right now has, I also asked a question about the Excel spreadsheets because she currently has that's how she's tracking her clients. And so if I'm going to start doing bookkeeping for her, just walking in the door, what would be I guess the basic foundational mindset of what's the best way to handle that before I can convince her to move into QuickBooks?
Oh, she's doing everything in Excel. Yeah. So when I see that, I sweat a little bit because first of all, Excel is a really complex software and not a lot of people really, know how to maneuver it. So managing everything in there, I think is a little bit tricky. But as long as I think you have a clear understanding of each project and how it's labeled, then I think you can use that labeling to further build out a budget. So maybe if you can organize her projects by tab, at the bottom, there's like all these tabs across the bottom. Right. You can organize projects by tab and then build through, okay, how much did she spend on marketing for this project? How much did she spend on whatever expenses for that project? And then have maybe a consolidated tab where all the expenses roll up into one. This is why I say I don't like it because it gets really tricky. So if you're not an Excel whiz, it can be really complex. But I mean, just really simply, I would say, just navigating those tabs and making sure that you have a clear understanding of how much she's spending per project. And then just encouraging her, like, in order to better manage this the right way, we may want to move into software that can make this a bit easier on you, because Excel is too easy you click the wrong thing and now everything's messed up. All your formulas are messed up. And so it can be a bit complex.
Okay.
So
thank you.
You're welcome. You're welcome. I'm gonna go into the chat and see. I didn't answer Myra's question. Laura had a question: what inspired me to create compliant, and how is it different from other options? So, what inspired me to create compliant is all of you. So I had a series of clients that all had really bad tax landscapes. People were not paying business licenses. People were not paying sales tax. They weren't paying anything and just had all of these surmounting bills. And they were like, we don't really know. I didn't know I was supposed to do this. I didn't know I was supposed to do this. So I thought there has to be an easier way to help people cover every tax type if they're a one-of-one business. And don't have the resources to hire someone to do this for them. So that's where we stand. We stand in the gap of people who don't have the resources or don't want to put their resources toward that, to act as a technology tool to support them on that journey. So, and we're different because not every other product doesn't deal in tax. They usually only deal in income tax. TurboTax is an income tax product. TaxJar is solely a sales tax product. So we stand in a space where we cover all tax types. So that's that. I answered Felicia's question. What are the limitations to QuickBooks budget feature? It just literally regurgitates your profit and loss statement. So it takes your profit and loss from the last period and then dumps it into this manipulatable sheet that you can then like tweak the numbers if you want. And that to me is a little bit too restrictive. I need the freedom to I am an Excel junkie, so I need the freedom to move things around. But for someone who's not an Excel junkie, it's actually a really good tool. So hopefully that answers. I had one more slide, and it was just working through the benefits of why you would want to use automation for any of this. And I just wanted to mention that it just eases the anxiety of having to try and create ways to make things happen. Automation tools do the work for you, takes the guesswork out of it. And yes, it's a little bit of money, but it's worth its weight in gold for sure. If it means you're saving your mental space for something that really does matter to you. So is there any more questions? That would have been the last. And then I had one last slide that said the end if you want to see it. But anything else? Anything anybody want to talk about that I haven't covered? Thank you guys. Who's popping off? Thank you. Thank you for joining us. Is there anything that anybody wants to cover that I have not covered that you have more questions about?
Funding. Get those projections in place.
Right. I'm not a funding guru, but I will say that yeah, projections saved me. I had 3 really big venture capital firms that I pitched to asked me, hey, you know, can you give me your projections? And I didn't even know. I had to, like, in one night create projections. Thankfully, this is what I do for a living, and I was prepared. But if this was not what I did for a living, I would have panicked. So I definitely want to encourage you guys, if you are a startup, to start thinking about your projections now, if you aren't already. Is there anything else from anybody else?
I have a question. So right now there's a lot of like grant money floating around, and is that considered?
Yes.
How would you, I guess, take that grant money and put it into your expenses and things like that? Is it income?
Yes, it depends. Yeah. So if the grant process requires you to fill out a W-9, then that money is taxable to you. So a W-9 is just a form that tells the government that this company is giving you money.
Okay, so
they're going to report, what's that?
It would be considered like income in that sense.
Yep. So that's something people have to be careful of. Grant money is not free money in the sense that there's no interest, you don't need to pay it back, but there is a tax element on it if the granting company does require you to fill out a W-9. So just be mindful of that. If they don't require that and they just give you the money and say, peace out, then you're good to go. But that's rare because they want to take the deduction to them. The company that's granting the money wants to take the deduction, and it's only deductible to them if someone in this process has to pay the tax, right? So if the people who are giving you money isn't paying it, then you who are receiving the money is paying it. And you just have to be clear on which is which. Does that answer your question? Yep. Good. I feel like there was a question in the, can we use your tool in NYS and NYC? Yes, you can use the tool if you are anywhere in the United States of America. Not Canada though, not yet, but that's a year 2 goal for sure. Are there any other questions? Anything I haven't touched on that somebody has some questions on that are unrelated to what was presented? No takers. Oh yeah.
I'll ask a question. So I was actually just checking out Scoro. So I have done budget projections, actually just revamped ours for the next 3 years, and we used Excel. And so I'm wondering if what we have done, which is, I had some mentors help me set it up, but is there something that Scoro does that investors are more interested in seeing, or is it going to touch on stuff that I maybe haven't thought of, or is there a different format? Is there a reason to do that?
No, it's just if whomever is doing this didn't have the support of mentorship the way you did, then this is a starting point for someone who doesn't start. But I don't think it has any additional features that you haven't already covered, because projections are really just forward-thinking financial statements, right? Like it's just a P&L, 3 years, 5 years, 8 years of P&L, or a balance sheet, 3-year, 5-year, 8-year balance sheet, or cash flow statement, which if you've already got that data, there's no other way that they're going to do it that's any fancier. It's probably just quick deposit of that. So you can input some information and it will quickly regurgitate this ready-made thing. But if you already have the resource support that's helped you build it, I don't think you're missing anything.
So it doesn't make fancy graphs instantly or make something like,
oh yeah, it totally makes fancy. Oh yeah, it makes you fancy graphs, it makes you fancy layouts, absolutely. But again, if you already feel good about what you have, I don't think it's anything that, it's not going to be information that you don't already have.
What did you
It might just be presented better.
What did
What's
you
that?
use?
Oh, I just did it in Excel. I'm an Excel junkie though. Let me just preface that. I use it every day, all day.
Thank you.
Sure, sure. Is there anything else that anybody else wants to talk about? You got me for another 25 minutes. This is oh, I love it. Yeah, I do love Excel, but yeah, this has been 13 years of career using it, so I certainly have seen its pitfalls for sure, for sure. Anything else anybody want to talk through?
And it's okay if we all buy back a little bit of time today. So don't feel pressured, but of course you do have someone who will answer all of your, well, maybe not all of your questions in 25 minutes, but many of your questions. So
as many as I can.
Pop into chat or just come off mute if you do. And if not, we'll kind of wrap up.
Cool. Oh,
This might be
released. Yeah. Suzanne, do you mean on video? I think is what you mean. We'll have a recording for attendees post workshop. So if you need to go through and get out some specifics and that sort of thing.
I had a question, and it might just be for me, but since we have the time, for balancing different entities and what, like how they might interplay and what benefits might be there that I don't know about. So I have like regular income from a full-time job and also am a shareholder in both an S Corp and an LLC. And they're both startups right now and they kind of interplay business-wise, but I'm thinking tax-wise, if there are, like, what's the best way to manage those three different kind of levels of taxes?
so a shareholder in an S Corp, you're not going to have, so an LLC is pass through. So anything that the LLC does, you split that, you know, the income or the loss between you and all the other people that are in on it. So that comes directly to you to report on your tax returns. So that taxability covers itself. Like the IRS doesn't recognize an LLC as a taxable entity, so it doesn't have its own thing. It just gets passed on to the owners. So that covers itself. The S Corp, it depends on how they file. I'm assuming that it's a LLC filing as an S Corp, or it's a C Corp filing
I've
as
never
an S
done
Corp.
it. I don't know.
Oh, so depending on which one of those answers there are, you know, the magic is in the K1. Usually C Corp, S Corp, you don't get a K1, the business pays its own tax. And then if it's profitable, then the profits get passed on to the shareholders and then you have to pay tax on the profit. But it sounds like it's new and there are none, so you probably shouldn't have to worry about the S Corp. But the LLC, whatever you made or lost will be transferred on to everyone who's in on the, every member of the LLC. So it all comes back to you ultimately to report on your 1040.
Okay. And the S Corp I thought was also pass through, or does it?
That's what I was asking. Yeah, that's what I was asking. So if they were a C Corp and they declared they wanted to be an S Corp, then it's not pass through. If they were an LLC and they declared they wanted to be treated like an S Corp, then it is pass through. So it just depends on what entity type declared the S Corp identification. I know we're getting really specific, sorry.
So I actually, this like kind of touches on the questions that I had too then. So with an LLC, if it was like, historically, let's say for like a 15-year period, it was one individual owner and now there's two, do they end up both having to split what are like profits and losses? Or because like, so the original, like we'll call it the OG owner, he was like, no, you're just gonna end up doing your 1040, like the income that you like has been made and not anything business related. So is that
okay? So that sounds tricky to me. That sounds not accurate.
Right?
So in an LLC, yeah. So that sounds tricky. With an LLC, if they're filing, you know, as a partnership, you're gonna get, you know, this K1, and that K1 is going to be your portion of the losses, you know, depending on your ownership portion. So if you own 10%, 20%, 30%, whatever, 50%, then you get 50% of the losses or 50% of the income on a K1. And then that K1 you use to file your 1040. But if they're telling you, no, you're not going to get that, that doesn't apply to you, then I would be concerned that you're not
right?
truly a partner.
So
yeah.
It should be as like, because it is, yeah, it's 90-10, right? So on the 10%, you should be getting 10% of like the overall business profits. And then if
and 10% of the losses.
Okay.
Yep.
And so that's
exactly right.
So there should be like basically an additional payout, like whatever the salary or income is, right?
Not a payout. It's just declaration. So you're just declaring what the business has made, and you're going to pay for the income tax on what the business has made. It's not a payout. Yeah, a payout is just what's made, you know, between what you all agree on. You can pay yourselves whatever you want, but that's not the same as a K1 or like a distribution at the end of the year. At the end of the year, what you get is just your portion of the income that the business made or your portion of the losses that the business took. And then you have to claim that on your tax return. You either claim it as income and then you pay tax on it, or you claim it as a loss and you can deduct it from your other income.
Okay.
But it's not a distribution. It's not a payout.
Okay. So then with like any LLC, sorry to be like super specific.
You're okay.
At the end of the year, like it'll be like, okay, let's say the business made 50 grand or whatever, right? After all losses and other expenses. Then there should be a payout of like 10%. Or not a payout, but like, you know.
So that depends. That depends on what you all agree to in the company. If it's in your company bylaws or agreement that you want that difference in cash, like I want my 10% of that 50,000 in cash, they absolutely can give you a distribution, but you still get a K1. You still have to declare your portion of the ownership. That tax still has to be paid because an LLC doesn't pay its own tax, right? So if I'm an LLC and I made $100,000, the business doesn't pay tax. The business gives the income responsibility to the owners, and the owners pay tax for the business.
Gotcha. Okay.
Yep.
Thank you.
You're welcome.
Great. Anybody else with burning questions? Okay. Well, with that, we will again have the recording up for attendees to be able to reference. We'll have that up in a couple of days, and we'll also follow up with information, of course, on compliant. Sounds at least like a really reasonable thing to check out. I know I'm going to, for sure. And a couple of the other tools that were mentioned. So thank you so much for being here, Shiloh. Amazing. Thank you so much.
Absolutely.
This was really helpful. And this is a good sized group to be able to get some good workshop interactions too. And again, thank you so much for just being part of the community and joining us today, and hope to see you in a couple of other spots along the way. All right.
Absolutely.
Thanks, everybody.
Thank you, guys.
Ciao.
Bye.